Good morning, investors and traders. This is Naim Azam, Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video. In today's segment, we will be focusing on two different asset classes, gold, oil, and Bitcoin. Both of them are moving lower, basically moving in the same direction. And we will be discussing the fundamentals along with the technical analysis and just really trying to figure out why the prices are moving in that direction. So let's have a more deeper conversation on that before we do anything else. As always, it is important for me to go through this disclaimer. Anything we should be discussing in this video cannot be perceived as an advice. The full disclaimer is right in front of you. For more information, please feel free to contact. Now, I'm going to bring out the MT4 platform and we will begin the conversation by looking at the daily chart initially. Now, one thing to notice from the daily chart is that this is your 50, 100, and 200 day simple moving average. Price is clearly trading above these moving averages. Recently, after this massive and stellar rally, the price did start to move back towards its 50-day simple moving average. So something what we call a retracement trade. So basically the price, so after the last time the price touched the 50-day simple moving average was over here, and after that we saw this massive rally. Now the price kind of came back near its 50-day simple moving average, and now we've started to see that rally back towards the upside. Now the question really is that why are we stopping over here, and is this bounce that we have seen in the price, if this bounce is really over? Well, it may not be over for one reason. We do not have any oversold reading in terms of the RSI, but this particular RSI reading doesn't really matter that much. However, if the RSI stays in the oversold area, because anything which is above 70 is oversold, anything overbought, and anything over or below or near 30 is over sold. So this is overbought, this is your oversold area. So or when the price reading comes in around 70 or above 70, traders usually will look for a trade to the downside, meaning they expect a retracement and move to the downside. When the reading is near 30, meaning the prices are oversold, traders will look for an opportunity to buy. Now, clearly the RSI is trading in between them. So we don't have a reading where we can say that yes, it is overbought, the prices are going to move to the downside. No, that is not what we have. And we don't have the opposite side of that situation as well. So we are very much trading in the middle, meaning the prices can really move on either side. So what we got to do from that perspective is we have to go into a smaller term time frame, meaning the 4-hour time frame, and then see what exactly is going on. Now, the moment that we shift the curve into a small term time frame, meaning your 4-hour time frame, the intraday time frame, things start to become a bit more clear. Because what is happening on the 4-hour time frame is the price is in constant battle with the 50 and 100-day simple moving average. Now, recently the price did cross above the 100-day simple moving average, but it failed to cross above the 50-day simple moving average. And after that, the price crossed below the 100-day simple moving average, but it found support. And look where it found support. It found support near the 200-day simple moving average. And after that, we saw this massive rally. And when the price crossed above the 150-day simple moving average, it was a further confirmation that bulls are about to pick up more steam. Now, what we are seeing is that the price is not being able to cross above the 50-day simple 100-day simple moving average, and that has prevented the price to cross above that. Now there are two opportunities over here. If the price drops below the 50-day simple moving average, you can put your stop losses above the 100-day simple moving average, and you can continue for this market to you can expect this market to move to the downside, meaning back towards the 200-day simple moving average. However, if the price moves back above the 50-day simple moving average, you can put your stop loss just over here below the low of this candle, and the chances are that then the prices are going to break above the 50-day simple moving average, and then we'll be really moving back towards the all-time high. So that is the most important thing. So this area between 48,800 to 50,878 is going to be immensely challenging and immensely important. So I want you guys to continue to pay attention to that. Now, in terms of a gold prices, again, we will move on to the daily time frame. What we are seeing is that the prices are trying to find some sort of a support from the previous level. Now, as of yesterday, we moved our support levels to here. So these were our support levels. So I'm going to move them right over here. And then we also discussed another support level, which was just right over here where the prices are trading. So we had a level on top of level. And then this is what we were really discussing in our analysis yesterday. So price has kind of started to bounce back a little bit from its area of support. In terms of a resistance, let me draw them back over here. So the first one is going to be just right over here between 1793. And now don't worry about it if you cannot see the levels, because I am about to zoom into those levels, so you will get a better reading on that. And then plus, if you really wanted to look into more, you can see our analysis from yesterday as well. So this is our support level number one, 1657 to 1679. The second support is at 1702 to 1725. The first resistance is 1793 to 1812. The second one is 1855 to 1872. Prices are looking to move from here, but again, we do not have a very strong evidence of prices moving to the upside. What we really need to see is what is happening on a small term time frame, and on the small term time frame, nothing seems to be really propping up too much. All what it shows is that the trend, the long term trend, is still to the downside. RSI is way oversold, meaning prices are likely to move to the upside. One important point to pay attention is the price has made a lower low, but the RSI hasn't made that, and that indicates to me that gold price is highly likely to bounce from here, because we have negative correlation between the price and the RSI, meaning the price has formed a lower low, the RSI is not showing that, and this means that the downward momentum is fading and the prices are likely to move back towards their 50-day simple moving average, which is trading at 1775. All right, that's all for now. See you guys next time.